Welcome back to the Broker Power Up podcast, the AIME podcast for strategies, stories, and insights to help you close more loans. I'm Tommy Golightly, joined, of course, by Jonathon Haddad.
What's up, everybody? Hope you're doing amazing. Tommy, hope you had an amazing week, my friend.
It was good. It was a good week. I spent the week in doing some bad moderation over the weekend. So it wasn't bad. It wasn't too good. It wasn't too bad. So we do have some broker buzz questions this week. We're going to dive into that, talk about some of the more prevalent discussions going on in the group. And then we're going to also have a fortune cookie, and we're going to have the sales pitch where John teaches us a sales tactic. And then we're going to have story time with John. So first, we must start with our fortune cookie.
Yes, fortune for today. I will take this one. Your mentality is alert, practical, and analytical. Lucky numbers 4, 8, 10, 11, 19, 37. Your mentality is alert, practical, and analytical. You know, I love this right now. It's funny. So I've been on a pretty wild workout regimen over the last 3 weeks now, where just getting back, with AIME and my kids. I have 3 kids now with next door lending. I still originate loans. I still do that. I do all of it. I let go of the gym, and it caused just so much angst and anxiety inside of me. I won't lie to you. It's about the last 3 weeks now. I've been super consistent. The mental clarity I have is something I cannot explain to people, how alert, how dialed in I am. Even my sleeping is getting better. I bought Blu-ray glasses to help me sleep at night. Like, I'm taking it super serious. And that's why this one made me smile when I read it. My mentality is alert. And I would challenge each and every single one of you. If you don't feel alert, if your mind feels foggy like mine does a lot of the time, my challenge is, what are you doing to work on yourself? Are you going to the gym? Are you checking in with your doctors? Are you working on your blood work? Are you taking the right vitamins? Are you doing the stuff you know you're supposed to be doing before you just sit back and say, oh, I have brain fog? Because I was that person. Dude, I'm just tired. I got brain fog. It's just this. It's just that. Turns out I just needed to work out. Turns out I needed to be consistent. Turns out I needed to have a diet, by the way, because going out as often as I do, meeting with brokers, you're eating out a lot. And so shifting all of this for me has been huge. So that's the first step. Obviously, practical and analytical is a big deal. But the big one for me with this, Tommy, was for sure my mentality is alert. That is absolutely spot on.
This is definitely your fortune.
Mm-hmm.
I need to start going back to the gym. I have not been on 3 weeks. I saw your message this morning to me, and I was just like, oh, yeah, no, I'm not doing that.
No.
But I do have a rowing machine downstairs, which I do. And that does help a lot. So maybe I'll get back on that later today. And this is my inspiration to do that.
Dude, the rowing is incredible too. That just completely, I did Orange Theory for quite some time, and they have a lot of rowing incorporated into it.
Mm-hmm.
You use muscles you were not even ready to use rowing, man.
I rowed competitively in high school. It was
I did not know that.
Yeah. So it's the workout I prefer. It's one and done. You do that and then you're done. But I want to dive into some topics of the week. So for the broker buzz, our top discussion point number 1 is, what are the pros and cons of doing loans for tiny homes? Is it worth your time?
So, okay, tiny homes. There's been a lot of buzz going on around these tiny homes. I've actually had a lot of clients reach out. You're seeing them a lot in places like California, obviously being a big factor, even Texas, Florida. And basically, these companies are bringing in houses and they're putting them together similar to a manufactured home or process. It's actually a little bit easier than that. And then they're assembling them. And in some cases, they can require some very minimal financing. Some of them do get pretty expensive, which was very shocking to me since they are tiny homes. And the idea was for affordable cost of living. But when you look at some of these prices and the fact that they have to get financing, I'm like, that's like a small condo that you could buy. There isn't a lot just yet, just to be upfront with this group. There are a few niches and one-offs based on the type of loan and the way that it's structured that you can do with some lenders. But real talk right now, we got to just ask a lot of questions and figure out if this is going to be a big thing for us in the future moving forward. So I don't have a lot of insight. I don't want to give you any kind of BS when it comes to who can or cannot do them. It's been a lot of just calling people, asking a lot of questions. We do house them. The loan amounts are generally smaller because they're financing a small amount for the tiny home. So it's great for some families from an affordability standpoint. And if you have the ability to help finance, by all means, make it happen. I think you'll see a lot more of this over the next 2 or 3 years as this becomes a much more relevant thing. And you'll see Fannie, Freddie, FHA, all of them start to jump in a little bit more on products like this, like we've seen them do with mobile homes over the years, and become a little bit less strict around mobile homes depending on when it was built. So I would not be surprised to see a lot of that over the next couple of years.
I was looking into the idea of getting a tiny home when we were getting our house. And then I looked at my comic book collection. I was like, oh, wait, that doesn't even fit. So
it just depends. Like it is the place, right? There is people for it.
Absolutely. All right, moving on to our second question. What is the biggest reason for a PIW, a property inspection waiver?
So this is cool. We've been seeing a tremendous amount of these. I actually just got one of these. It was so new rule, Fannie and Freddie now. Basically, you can do 3 or 5%, and you can get an appraisal waiver with a data inspection. So what that means is the system will say, okay, we think the house is worth $500,000, but let's send out our third party person to go check. Usually it's a real estate agent. A lot of the times is what I see. They'll just go and make sure that the house is up to standards. They'll check a few boxes, and they're just verifying the data that Fannie or Freddie already said was good to use. This is a property inspection waiver. So for purchases, if you put down 3% or 5%, you still have the ability to get this, but you need that third party piece I was telling you about. If you do 10% down on a primary residence, you have the chance to waive the appraisal altogether, believe it or not. So why is this becoming more relevant? Well, it's really simple. The data that they have on home values is better than it's ever been before. The amount of information that they're collecting, they're very close when it comes to considering and understanding home values. That doesn't mean it works in every single area. I know there's small pockets in this country where you're just not going to find the comparable. In this instance, though, Fannie Mae and Freddie said we have enough data collection from appraisals that we've done over the last 40, 50 years that we feel good giving you a waiver on certain transactions. Now, you can never get a waiver above $1 million. So if you're looking to buy a home for $1 million or more, you're not going to ever see that waiver. They just don't allow it flat out. But if you're doing a purchase and you're doing 10% down, have your loan officer, if you're a consumer, look into a property inspection waiver. This doesn't mean not to do an inspection, y'all, okay? Still do your inspection. Make sure the house works for you and your family. The appraiser is just simply saying, is this home worth its value? Because the person giving you money, the investors, the lenders giving you money, wants to protect their asset. That system comes back and says, we feel good about this protection. This is a big deal and such an advantage for your consumers. We're also seeing a tremendous amount of these on refinances right now. Why is that important? Well, let's just say you have a past client that you wrote a loan for 12 months ago, for instance. And let's just say that client did 5% down and had a 695 credit score, okay? Now, you just call them back to check in 12 months later. If you run it through the system, you might be able to get an appraisal waiver at 10% down now. So even though the client put down 5%, their house could have appreciated to give them 5% additional equity. And what that means for the client is their pricing on the loan will get better, and in turn could be a better rate for them. Why is that the case? Because investors look at this as risk-based. It is zeros and ones to them. As much as you might not like it, they don't care. There's no gray. It's black and white. Very, very simple. So in this case, the situation for them is, okay, if now you have 10% equity, that is more favorable for us, is what they're saying. Because they're saying, if you do default, I still have the good likelihood that I'll recoup my money if I sell your home. That's really what they're doing and how they're looking at it. So the more equity, the better. Check in with your clients, especially your past clients. Run it through the system, see what you can do. And on purchases, have these conversations with agents and consumers. The stronger the profile from your consumer, the better. So the higher the credit score, the more assets, all of that plays a factor when it comes to property inspection waivers. And it feels good, Tommy, to see these come back because we lost them for the longest time. When I say lost, we just weren't getting a lot of them. And now they're coming back, and it feels really good to see them on a lot of files.
Yeah. So is that because if you have more equity, there's less risk for the lender?
That always risk based. So you're pricing,
and you're decreasing their risk.
That's it. Like even so, example, look how much it plays a factor. So even if you have a client that's 620 credit score, okay, if that client puts 40% down, so 60% equity, I'm sorry, they have 60% loan to value, 40% equity. If they put 40% down, their pricing is almost as identical to somebody that has an 800 credit score.
Okay. So it's a balance of scales, and you're putting more weight on that side of the scale.
Yeah, well, you are, because why? What are they protecting? They are protecting their asset. As much as people think it's my house, it's not until you pay it outright. Let's just be clear. Someone's giving you the money, just like my house I'm in right now. All right. I did not pay cash, y'all. All right. For this house. So it's the exact same idea. They're saying more equity, less risk, therefore better pricing for you, the consumer.
But that doesn't necessarily mean more risk for the consumer, because they're
no idea is we'll give you a lower rate, right? Okay. And now if you're a higher risk, they'll say, okay, we're going to charge a little bit more because you are a higher risk. We're going to take into consideration more of your credit score. That's why if you look at pricing, 10% down clients, one client that's 800 credit, one client's that's 640 credit, your 800 credits pricing is significantly better because their risk is still slightly less than the person doing 10% down with a 640 credit score.
Got it. All right. For our last question of the broker buzz, we have, what is the best way to respond to a realtor who sends you this? Here's a prospective borrower. If you close with them, I'd appreciate a referral fee.
You know, I saw that one and I was just like, whoa, these agents are wild. Yeah, hold your ground at all points in time as a loan officer. Never, ever feel a certain way. Never feel like, don't ever feel like you have to walk on eggshells around agents. Don't ever feel that way because it doesn't matter at the end of the day. If you're ever in a court of law, they're going to ask you questions and you're going to have to answer them. So hold your ground. And if you want to be more polite about it, perfect. No problem at all. Hey, listen, with me, it's really important we build incredible relationships first. I'm going to do a great job with your client. And in turn, my idea is to help bring referrals back to you. That is my goal. I want to be on the same page because it's not easy to work these clients, as you know. But the referral fee thing is something I don't do because it's illegal. You can't do it. Well, I have so-and-so lender. Then I'm not the lender for you. I'm really sorry. I'm just not the lender for you. Their time will come, people. Their time will come. I promise you it'll happen at some point or another. Collecting referral fees. The law is watching. State regulators. It's going to get more strict. You will see fines. You will see people getting flagged for this. Matter of fact, the person that was actually one of the attorneys on the NAR settlement, who started the NAR settlement, posted recently about his next focus. And part of his next focus is this. Exactly that question right there. That's a huge focus for him. Joint ventures, referral fees, feeling like you're targeting a client and putting them in a certain direction and making them use a certain lender. It's coming, y'all. And if you don't think it is, you're very naive because it just happened to NAR. It'll happen to our side too. Shut that agent down instantly. You can shut them down with kindness. I'm not saying you got to be rude. You don't have to do that at all. That's just not how we operate. That's not how you should operate. If you do, I really will challenge you on there. There's so many other agents out there, and there's so much ways to strum up business, and it's not by that. I can promise you that without a doubt in my mind. Never done it, nor should you ever. That is just one person's opinion, and I'd like to say I think I'm pretty good on that opinion. I feel very strongly about it.
So would a proper response be to educate them on why they shouldn't? Oh, okay.
The agent, they know. I as much as I want to give them credit, there's the tests they have to pass, the continuing educations they have to pass, the continuing education I have to do every year now for 12 years of my life. It is, if you miss that, you're just ignorant. And if you're a brand new person, maybe I cut you some slack and I'll educate you. But most of these agents are like, they like to play, they want to play in this gray area. I wasn't sure. I heard so-and-so does it. Okay, that's fine. I heard so-and-so does it. You shouldn't do it. So agents, please stop asking your LOs to do it. You're putting yourself in an uncomfortable situation because, again, In a court of law, you're sitting down in front of a judge, in front of a jury. Can you answer the question with absolute confidence that you truly didn't know what you were doing? And the answer is you can't, and you know you can't. So stop. Please stop. It's going to hurt us. It really will if you don't stop doing this.
Well, that does it for the Broker Buzz this week. We're going to have a quick ad roll from membership, and then we'll be right back with the sales pitch training. Be right back.
Are you a wholesale mortgage professional? Well, then the very first thing you need is a community to help you and your business grow. With AIME membership, your community is right here. Joining our community means never navigating the market alone or operating without a safety net ever again. We are 16,000 members strong of united wholesale professionals. From rookies to top-ranking originators, all dedicated to supporting each other's success so we can grow together. Beyond entry to the best community in the mortgage industry, AIME membership gives you the resources, tools, guidance, discounts, services, and support that help you and your wholesale business grow, thrive, and most importantly, close more loans. AIME membership connects you with leading wholesale lenders and vendors, offering you exclusive access, services, and discounts that save you more money while helping you make more money. Never get stuck on a loan again with our lender escalation program. Grow your network and skills with the wholesale industry's best conferences and networking events. Get the strategies and skills of top originators and industry innovators with AIME's cutting-edge wholesale mortgage education, resources, and content. AIME offers all of this and more, starting at a low price of $19.99 a month. You heard it here first. Couple cups of Starbucks coffee. For you to learn more and get started, all you have to do is visit aimegroup.com, AIME group.com /membership. Your community is waiting.
All right, and we're back. Time for sales pitch training. Ready to educate me, John?
Yes, sir. I am ready to educate you, my friend. I'm going to dive in deeper into the a pedestal sale. Have you ever heard of that before?
I'm guessing it has 3 or 4 pillars.
Okay, super. It does have 4 pillars.
Okay,
which is hilarious. But the pedestal sale is exactly that, right? It's putting something on a pedestal, and it is a very underutilized sales sales strategy from what I've seen over the last couple of years. I feel like I used it quite a bit earlier in my career, and I've just seen it less and less over the years. So a pedestal sale is you take something that could be perceived as small and you turn it into a really big deal. An example of this for me that I really drive home is whenever I talk to clients about interest, I never just tell them the interest they're saving for 1 month. I tell them the interest they're saving for 3 years. A lot of people don't think that's a big deal. I do. I think that's super important. Why? Well, one, the average consumer refinances every about 4 to 7 years. So I like to use that 3-year marker because they're going to make those payments. But some people sit there and go, well, I'm only going to show them 1 month and don't think about the long-term idea of that. Well, John, it's a sale. Well, I feel sale. What do you mean you feel salesy? The consumer has to pay the interest one way or another. I'm just explaining it to them and showing them how much they're going to be paying over that time period. That's why the loan makes sense for them to do. I'm not just going to show them 1 month of savings. It doesn't make sense. I'm going to really make it a big deal. So there's 4 steps to a pedestal sale every single time. Number 1, don't sell the product, sell the statue. All right. Now, what does that mean? Don't sell the product, sell the statue. The product is the 30-year fixed mortgage. It's the 15-year fix. It's the 20-year. It's the FHA 30-year. It's whatever you want it. That's the product, right? The statue is paying off your mortgage. That is the statue, ladies and gentlemen, paying off your mortgage for your clients. And that should be the direction you're trying to take them in. And if it's not in that direction, then it's saving money. It's putting money aside if you're going to help them refinance, if you're helping them purchase a home. Right? It's living in this home, making it feel comfortable, making sure that they're not overdoing it when it comes to payments. I'm talking about the big picture. I'm not selling a 30-year fixed mortgage. I'm selling the statue. And that's how I feel when I get on the phones. I feel that strongly, that I'm not selling you a product, because I've bought in many houses. I've sold many houses. I've done this for 12 years. I know the importance of it. I've done the same loan for one client over 12 years, 6, 7 times. They'll call me at this point because I sell the statue. I sell financial freedom. I do not sell a 30-year fixed mortgage. That's number one pillar. Number two, create value on what you're selling. So I gave you the example. If the client's in a specific loan right now at 7% interest, and I can do a loan at 6.5% interest, the value there is not about the first month and the interest savings that they have. The value is the savings that they're going to have over 3 years. I don't need to create the value. It's there. My job is to now articulate it properly to the client. So number one, don't sell the product, sell the statue. Number two, create perceived value. Number three, control the narrative. You now shift and take control of this conversation. Why do I say that? Well, because you're the expert. Do I walk into a doctor's office and when they're telling me what I should do based on what I'm telling them, I think you're wrong, doc. I'm going to do this instead. Fine. So be it. But at the end of the day, they're the ones that control the narrative, not you. You're going to treat me the same way. I've earned it. I've passed my test. I've helped thousands and thousands of people get into a home. I've done it at a really high level for a really long time. So I'm going to control the narrative. And you should too. Do not lose control in the conversation. How could they know more about this than you do? They can't. It's a very rare opportunity where someone might know more than you. Happened to me on multiple occasions. You know, one specific time I remember where someone truly knew more than me. He was one of the original DE underwriters for FHA back in the 70s. This person knew a lot. And out of the thousands of people I've talked to, I can remember maybe 10 that knew slightly more than me about mortgages, and that one guy a lot more. So you got to have that confidence to control the narrative. And number four, use scarcity. Use scarcity as part of this. Look, stop waiting. What are you waiting for? You're costing yourself interest every single month. I have clients just like you who wanted to wait and cost themselves tens of thousands of dollars waiting. There's no reason for you to do that. So y'all, a pedestal sale is really simple. Don't sell the product, sell the statue, create the value because it's right in front of you, control the narrative, and use scarcity every step of the way. Pedestal sale, my friends. How can you in your day? Go ahead, Tommy.
Scarcity is a really powerful tool, and it works in many different areas and fields. And
we're built that way, Tommy. Yeah. Wired as humans. I mean, you hunters and gatherers. It's not like that's a joke from our history.
No.
You know, like
yeah.
Oh, what do you mean? I'm like, I mean, it's ingrained in your DNA that when things get scarce, your body goes no, no, because that's what our ancestors did.
Yeah. I think in combination, when you have the scarcity, you have the idea of financial freedom as the goal, right? Like that's your goal with the home. Mm-hmm. But putting into perspective, like something I get confused on is the interest and how it's like as a homeowner, I don't fully understand the interest and is it worth it to pay more on the loan at this percentage with this rate? And it's just, or do I just let it ride and pay the 30 years or I don't know.
No, look, like you're even having those thoughts. And for me, like if you're my client, our conversations, Tommy, are, hey, at this rate, just so you know, you can refinance for a 20-year at the same payment. Now, I think you got your house in like 21, I think.
Yeah.
Your rate's probably really good.
Yeah.
But right, for clients that did their home in the last 2-3 years, I have clients right now. So give you an idea. Let me just put this into perspective. You have clients right now that if they're paying a 6.5%, 7% interest, they can go to a 20-year when rates get to 5% and basically almost make the same payment on like a $300,000, $250,000 home. So imagine shaving 5 years off your home right now, Tommy.
Yeah.
Instead,
huge.
how old are you right now?
I am 33.
30.
About that for a second.
So basically, by the time you pay off the house in the current state that you're in, you'll be roughly 63 years old. Tommy, what if I can give you 5 years back and you can be 58 when you pay off your house and not have to worry about additional payments for 5 years of your life? How'd that make you?
I'd ask what I got to do.
Okay, you see what I did? What am I doing? What am I creating?
Fear of missing out.
Yes. And that's a real thing. Like what I just said is I'm not making it up. That's something real that people can truly do. So that's a pedestal sale that I just did right there with you. But what did I do? I painted long-term picture. I said, Tom, being 63 years old. Imagine you being 58 and you getting 5 additional years of freedom of not having to make a mortgage payment. I know right now, Tommy, 63 seems like a long ways away, but come on, Tommy, you tell me, how fast did 33 pop up on you? Be real with me.
Every year. I wanted to stop counting after 30. But
you feel that?
Yeah. Oh yeah.
In what I just said to you. That's not like that's how I speak on the phones, because I mean that, because I know it, because I deal with the same things you deal with. I'm 33 myself. You don't think I have 3 kids? I'm 33 now. I look back the other day, I go, what happened? You know? But life happens. So gotta not be afraid to have these conversations with people.
It's almost like, because it's like finishing off paying a car, right? So you no longer have a car payment. Now you have more flexible income to do other things.
Dude, yes, it builds up, man. Sorry, it builds up. It's just a big deal.
Absolutely. Cool. Well, I definitely learned something today, and I hope others did as well. We're going to do a quick ad read from Unify, our new event series that you guys should go check out and see if there's one close to you and join us. And then we'll be back with Storytime with John.
If you're an independent mortgage broker, real estate pro, or home ownership advocate looking to connect with like-minded professionals, AIME is here to give back. If you're an independent mortgage broker, real estate pro, or home ownership advocate looking to connect with like-minded professionals, we have the perfect event for you. AIME is proud to bring you Unify, completely covered by AIME directly. Unify is AIME's local networking and education series designed to help you and your community build more referral relationships to grow your business together. Each event offers exclusive content focused on a topic shaping the mortgage industry, with brief but powerful presentations from experts who have been in your shoes. Expect high-energy networking with real connections happening with real conversations. Plus, we're raffling off some pretty unique prizes at each and every event. Join the AIME's wholesale mortgage community, real estate professionals, and yes, even retail mortgage professionals. We want you there as well, because we know that we can make a difference in our local communities by connecting and having conversations together. This isn't just another event. This is where community meets opportunity. Whether you're looking for business strategies or the right people to help you level up, Unify delivers. Register today and join us for free in Dallas, Texas on March 25th and Phoenix, Arizona on March 27th, with many more locations to come. Just go to unify.aimegroup.com to get started. Now hurry up, spots are limited. Don't miss your chance to be part of something bigger.
All right, and we're back for my favorite segment of the week, Story Time with John.
I'm learning, Tommy. I'm learning. I'm doing research. I'm trying to craft and get better at this stuff and make them more relevant. So, you ready for this one? This is
anyway.
I'm going to keep learning and getting better. So, good old Theodore Roosevelt. You heard it here first. Yes, I am talking about that Theodore Roosevelt in the early 1900s. We're going to talk a bit about a pedestal sale with Mr. Theodore. So back in the early 1900s, there was something that Mr. Roosevelt wanted to do. He was talking about setting up the Panama Canal for the American people. And he thought the canal can symbolize American greatness. And he could make people not just support it, but demand it. Now, you see, this was going to cost millions of dollars. And quite frankly, up front when he started talking about this, people were like, what are you talking about? This is not real. Congress is not about to back this bill and sign off and do everything. So Mr. Roosevelt, knowing this, said, okay, what do we do? How do we craft something and put this together? Now, you see, Roosevelt didn't just go in there talking to the American people about the economic impact of this. Instead, he elevated to a historic necessity. He made it an achievement that he said would make the United States a massive world power. And he framed the canal as three specific things. Number one, a symbol of strength and destiny for the American people, the key to military and economic dominance, and an innovation that would change the world forever. That's how he shifted this focus. So instead of talking about the economics of it costing millions of dollars to the American people, he first said, here's why this makes sense. Here's three reasons. Now, he maybe later followed it up years later and said it also is going to cost us millions of dollars. But that wasn't his concern up front. His concern was getting the American people on his side, because he knew if he got them on their side, in turn, Congress, if they want to get reelected, what do they have to do? Yeah, believe it or not, y'all, politics has been the same for hundreds of years. So he had this idea. He rolled it out to the American people that exact way. He gave them those three things, but he needed to do more. So he goes, okay, what can I do to do more? There's a famous picture, the grand show of Theodore Roosevelt actually at the Panama Canal on the workforce, on the work floor, working with workers directly. So he staged this move all by himself. In 1906, he traveled to the Panama as the first ever U.S. sitting president to visit a foreign country. First one to ever do it. 1906. So Roosevelt put on the clothes, he stepped onto a steam shovel, and he was photographed operating the machinery alongside the workers. The image was so powerful and symbolic. The president wasn't just there supporting the project, he was working on it. He believed in it that much. Well, when newspapers caught wind of this, because things didn't travel as fast as they do today, that picture that they took exploded. The amount of support that he had was unbelievable. Matter of fact, it was so powerful that Congress had no choice but to approve the Panama Canal and the millions of dollars that it was going to cost. Once he had this idea, it was no longer about building the canal. It was about the fact that if we don't build the canal, we as an American people are going to feel weak and unpatriotic. And in 1914, the canal was finally completed. And the president of the United States didn't get what he wanted by talking about just the numbers. He talked about the vision. He put it on a pedestal, and he saw this vision come to life, and he understood more than 100 years ago, ladies and gentlemen, the importance of understanding people, the importance of understanding pedestal, the importance of understanding a vision, and the importance of executing and staying focused. He was able to get everybody to see his side, and in turn, Congress had no choice but to approve the millions of dollar budget it costed to build the canal. So that is my story. I hope you understand it and start to use pedestal sales in your everyday life. It'll do nothing but help improve your business. I appreciate you all. Thank you, Tommy.
Yeah, that was, so I looked it up. Here's the picture.
Oh, there it is. I'm so glad. This is why this is me and you right now. That's
I needed answers. You started bringing it up. I was like, no, I need to see this. And yeah, I'll show it up again. But that's cool. It's leading by example, right?
Mm-hmm. I wonder what the pixels are on that camera.
2x2.
What?
3x3.
It's got to be 2. Yeah, black and white, 2x2.
Yeah, there's a couple in there.
Mm-hmm.
But yeah, no, that's cool. I did not know that story.
Uh-huh.
And it is very much I need to get here. We need to get here. What do I need to do? And it's similar to the pedestal. What do I need to do to get that?
Dude, it's beautiful. And listen, we're making these stories more relevant. Trying to pull stories from history for everybody just so you can see that it's been used for many more years outside of just the last 10 years. This has been around forever, y'all. All we're doing is tapping into it and learning how to understand it. That's it. All we're doing.
Cool. Well, John, I appreciate you, and I hope everyone else learned something today. So thanks for tuning in to the Broker Power Up podcast. If you found today's tips helpful, do us a favor, hit the like button, let us know you enjoyed it, which helps even more people see this content. Subscribe to the YouTube channel, ring the bell to get notified every time we drop new content. All of these segments that we are doing also go up during the week. So if you just want to watch one of these segments, they will have their own playlist and be up there as well. Share this video with a fellow broker who can use a power up. Remember to lead by example, to lift each other up, to grow together, and most importantly, close more loans. Until next time, keep powering up.